Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Tuesday, May 24th, 5:37 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Taking a quick look at futures. Bitcoin's up about 1%. Oil's flat. ES futures down 1.5%, NQ's down 2%, small caps down 1.2%, gold is up 0.5%. Over on the macro front today, we've got a PMI number coming out before the bell, along with new home sales, and we've got a 2-year bond auction today at 1 p.m. Also, I think Jerome Powell is talking somewhere. You'll have to go online and see what time and what it is. Nobody seemed to be making a big deal about that, but you know how it goes when Jerome Powell talks. Anything could happen. Over on the earnings front, before the bell, we got Best Buy. That's going to be a good read on retail and inventories and margin and all that. AutoZone will also be a good economic barometer. Abercrombie & Fitch, Ralph Lauren, Canadian Solar after the bell, Star Bulk Carriers in the marine shipping space, Nordstrom's, Intuit, Urban Outfitters, Toll Brothers, and housing. It was interesting to note yesterday on, we had a nice 2% rally. Home builders, ITB, and retail, XRT, were both red. I thought that was significant. Well, I got to tell you, the news of the day is Snapchat. And they came out and pre-warned last night after the bell and absolutely cratered the market, warning on profits and revenues. I can't remember the last time a pissant company like Snapchat could say anything that would take the market down to that degree, and even to the extent in futures to see a gap down in futures. There's that brief period, I think it's 45 minutes from 5:15 to 6 o'clock where futures don't trade, where they reset, do all their day-end calculations and all that kind of stuff, and then they reopen at 6 o'clock. So it was about 5 o'clock, and I got something to eat for dinner and watched a little TV, came back to the screen at 6:15, something like that. To see that gap down basically wipe out the whole day was so frustrating, to kind of have the whole thing set up the way we planned for a rally. It looked like it was off to a great start, be positioned long, and to have that happen is just really, really disappointing. So we'll have to see. What I want to do today, obviously we're going to most likely open with a significant gap down. So I'm just going to hit the levels that are going to be important to watch on the downside, and then we'll see if the market can hold it together. I want to remind you that there is a ton of month-end buying that is supposed to be taking place, from now through the end of the month. I think it's a JP Morgan number, if I'm not mistaken, but they're estimating between 5 and 6 billion a day between now and the end of the month of buying that is scheduled to take place. So I am hoping that, number one, that buying comes to fruition. Number two, that it's enough to overwhelm whatever kind of pre-market selling that may have taken place. And I think if we can hold the key levels and get some support from buybacks and month-end buying, that this rally can hold together. I really, at this juncture, want to see how it plays out. It may not play out. Things may get violated today, and then the whole thing was again a 2-day head fake. So we'll have to see. But at this point, both from a technical basis and a sentiment basis and a positioning basis, I think things are still poised and set up to go higher. Obviously, the events of last night and this morning kind of throw a wet blanket on it, but not to the extent of, throw in the towel and get short. We've got a Memorial Day weekend coming up. I just don't think piling in short at this point is the right move. So I'm still leaning bullish despite the big disappointment. So let's get into the charts. I'm going to bypass all the oscillators and stuff that we've talked about over the last few days. Absolutely nothing has happened. The rally yesterday really didn't move the needle on the oscillators or any of the things that we look at as signals to change our position. So for the sake of time, I want to speed this one along and just give you the key thoughts for today and the key levels. So starting out with SPY, we came up here to the 8-day where things kind of got stymied. We're trading back towards this 390 level. I think that's the level we got to hold today. If we undercut that, that opens the door for a run back down to 385. I would be cautious on any marginal undercut there as a possible bear trap. A little bit of follow-up selling and then a quick recovery of 390 would be bullish. And then don't forget, we're going to have a big open gap above on the overnight drop. So we're going to have a 2% gap above, and that'll be an interesting test from the standpoint of if they just go up to fill the gap, we could be at last night's close sooner than you think, and then that would be the real test. Open low here down at 390, them make a run up toward the close of yesterday to fill that gap, and then there'll be a decision, do they keep taking it higher, or was that just a technical move to come up, fill the gap, and then roll right back over? So whenever you got a morning gap, whether it's higher or lower, that's basically the scenario that you've got to have in your mind of the potential gap fill as a first move, and then what happens after that. So I haven't changed any of the pivot points here from yesterday's drawing, but you can see here 390 is going to be a key level. If you break below that, that brings in this 385 level, and I would say, if it breaks that, then there's the potential of, all hell breaking loose. As I mentioned, that's not my scenario, but got to keep flexible in these type situations. If everybody says, every rally is fake and this just proves it, maybe they sell some more. I'm hoping that's not the case. Over on the Qs, we got our little rally. You can see that the prior day's closing low was right in here at, what was it? 288.68. I think that's a good number. I mean, you can round that off to 288 or 289, however you see fit. But we're going to open in that area. And if we open below, certainly want to recover that 288 to 290 area to get back on track. And here we've got the hourly chart. You know, we could open down here in that 286 area and then work to fill that gap back up towards 292.50, or actually 293.50, where we closed the regular session yesterday. So I would be watching this 288 level, and I would be watching 286 on the downside to see where the pre-market selling might stop. If things get kind of carried away, your last stop is 280. You break 280 to a fresh low. Remember what we always say, fresh lows can bring in more sellers, and that's the downside potential that you've got to be aware of. IWM, more of a muted day, only up 1.2%. You can see we're just like hovering in this 177.5 area. Over on the daily chart, you can see we came up to this prior high where things got halted, and in the pre-market we are down in this 176 area. I think that's, and it's been holding all night, so I'm hoping that's it, but a break below would open up 173, and I think that's your fail-safe number. Below 173 opens up 170, and that wouldn't bode well for rally potential. So 173, 176, and then yesterday's close at 178.31 should be your levels to focus on IWM. Let's run through FATMAAN. You know, the snap results are pre-warning, nailed anything to do with digital ads. And so, you know, Pinterest is down 12%. The trade desk is down 10%. Facebook got whacked. So anything in that digital, Google got whacked to a lesser degree, but it got hit. So if you're looking for, you know, active day trading opportunities, you know, Pinterest, the trade desk, obviously Snap, Facebook, those should all be really active today. If you regard yourself as a, you know, intraday sharpshooter, you may find some productive trades in that area. Or, as we always say, on these gap down situations, you can let today play out, and then they set up as bracket trades tomorrow for bracket trade setups that'll work well as second day plays after today's volatility kind of sets the range for going forward. So let's look at Facebook. I took a look pre-market. It's down here at 180. So big drop, $15 drop from yesterday's close back into this gap. So we've got a gap within a gap. So we've got a gap yet to fill down here to, let's just call it 174. It could easily open at 180 and just keep on going down to 174, where the bottom of this gap is, or to the prior low at 172. But just keep in mind that wherever it opens, 182 or 179, there'll be a big gap above and a big gap below. So that may provide a good trading op if, like I say, if you're sharp, you can let that first 15 minutes kind of set the tone and the direction, and then you can use that 15-minute opening range as a mini bracket. If it breaks above that opening 15-minute range, you can get long, or if it breaks below the 15-minute range, you can get short and see if it doesn't come down and plumb lower levels. Apple finished the day, nice day yesterday for Apple, up 4%, closed at 143.11. I got long on this break above 140 yesterday, and of course was feeling all proud of myself as price advanced throughout the day, but now it's been knocked back to 140 here in the pre-market. It really needs to hold that level. We do have a prior low back here at 140, so in all of this support type area. So I'm going to give it a little leeway. I did not buy a lot of time. I've got one position for Friday, and I've got one position for, I think I bought the 144s for June 3rd. So I'm going to give this a little leeway right on the open. I mean, if it comes down to 139, I'm not going to, hit the sell button immediately unless it looks like the whole thing's falling apart. But if it can hold 140, I'd like to think Apple is okay and get, number one, get a gap fill up to yesterday's close, and if things keep going from there, look for 144 on the upside. If things fall apart, not a lot stopping it from going back down to 134, frankly, at the prior low. So there is some risk if it does drop below 140. It could go fast, so that'll be, more or less a game time decision on my part, whether, if it drops below 140 at one point, do I, capitulate and say, that's trading. Unfortunate, bad luck. But, along those lines, the bad luck and the good luck over a long period of time will usually work out. I know we always remember the bull crap like Snap that has the potential to ruin all our positions, but there's been times in the past where you get some unexpected news and things do a moonshot you weren't expecting, and when that happens, we usually attribute it to our, great trading. Got to be in it to win it, right? So if you're in it and you get good fortune, then that turns into being a good trader. If you get bad fortune, it's just bad luck. So Tesla's not doing a lot. I think it's got to hold 640 here, right here in the middle of the range. Tough to do a whole lot with. It's got to break above 700 to get anything going to the upside. And we could see this if the tape is weak this morning, come back to retest this 640. That would give you an objective level to look for, look for that to hold for an objective long. And if the whole thing falls apart, 640 gives you an objective level to shoot against on the downside if it happens to go in that direction. Microsoft had a good day yesterday also, up 3%. This is another name I got long on. Kind of got up to this 260, 261 level where it built out a multi-hour flag. I got long kind of right out of the box with June 3rd 260 calls and was sitting pretty, of course, but now it has gotten knocked back in the pre-market down into this 256 area. So basically starting over on that one. It needs to hold this 254 area to kind of keep it together. If it can't, then this prior low down here, 250, 248 area comes into focus if if the whole thing falls apart. If we rally up, take out yesterday's high, then I think this 263 and then 266 come into focus, and then we'd have that W double bottom formation with bullish divergence back in play. So that would be a nice result for Microsoft. Amazon was not particularly hit last night in this wash down. I think it's trading here around 2100. As you can see, that's the key level. We got a prior low here. We got multiple prior lows back here at 2100. You really don't want to lose 2100 if you're a bull. If you're long Amazon, it's got to hold 2100. Below that, then things could start falling apart. By the same token, on Google, it was hit. You really want to see 2200 hold here. Otherwise, you got $75 of downside to this prior low at 21.25. I did not look on Google to see how much it got whacked last night, but being in digital ads, I would expect some type of hit here this morning. And remember, on these digital ads, and I'm by no means an expert, but there's different tiers of quality. I would probably put Google and Facebook probably at the top of quality digital ads versus a Snapchat. So in the whole ecosystem of digital ad spending, are they going to whack Facebook first, or are they going to whack Snapchat first, or are they going to go equal across the board? And if you're an ad manager, you're going to keep the ones or the companies, the digital ad spend where you're getting the most return on your investment. So there's a grading process there, and I would imagine a lower tier company like Snapchat would probably get hit first. Now, the bigger question is, is that digital ad spending, are they the canary in the coal mine where they just pull back on digital ad spending because it's a waste of money because the consumer isn't responding? That's the bigger question. that needs to be answered. Netflix, again, really just oscillating here at 187.50. That remains your pivot for higher or lower on Netflix. Semis, I guess they were a market perform yesterday, up 1.8%. That Broadcom announcement that they're going after VMware kind of held back the semiconductor space for most of the day. Really didn't do a whole lot. It got a lift towards the end of the day. I think your pivot remains 228 here on semis. They're probably trading down a little with the market, but if it can hold 228, I think the door stays open to 233 on the upside. If things fall apart, you probably come back here to the top of this old gap at around 223.50, and then down to let's call it 221, where there's a pretty good line of support there for semis. I'm going to go quickly through ARC. I was really surprised yesterday. I mean, right across the board, no participation at all. And yesterday I thought, well, if we have a good day, I was thinking that the ARC complex would outperform, and it really did. And no participation at all. Here on FinTech, still right in the middle of the range between 1750 and 1850. I would just have those levels alarmed. I don't think there's any edge inside this range to, take a position. I would either wait for a breakout or a breakdown, and then I think you got a potential for something to move rather quickly. Genomics, same thing, but more towards the top of the range. I would be alarming 32.75, 33, something in that area. And if you wanted to watch that one closely, since you're at the top of the range, if you got the sense that everything's falling apart and ARCG seems to be following suit, then you could get short against, say, 33, and then look for a move back to the bottom of the box at 31. And then with any luck, you'd get a breakdown there, and then you'd be already aboard for the ride back down to 28.50, 28, something like that. So that one, being close to the top of the range, you're right at an objective level for either a breakout or a rejection at a minimum to the bottom of the box. Tesla not doing anything. ARC didn't do anything. And I wanted to point out, a number of people in the trading room pointed out that in the flagship fund, Tesla is no longer the largest component. I guess she's been selling it down. And so Roku is now the largest component in the flagship fund. So maybe if you're actively trading ARK-K, you'd want to have Tesla and Roku up as barometers for the flagship fund. Again, right here in the middle at 42, I don't think there's really anything to do. I would have 41 alarmed and 43.50 alarmed for either a breakdown and a gap fill or a breakout. And ARK-W, same thing, right in the middle of the range, no participation. Have 53 alarmed for a gap fill and 56 alarmed at the top of the range for a potential breakout. I'm not going to go over the charts, but on today's blog, I'm going to include a bunch of static charts on commodities to give you an update there. The spring wheat crop is not going very well up in the Dakotas, in the upper Midwest. North Dakota produces a large share of the spring wheat, like the wettest month in 120 years kind of thing, the 8th coldest month on record. They've only got like 20% of their spring wheat crop planted, just can't get the machinery in those wet fields. We saw a pop in wheat yesterday, so I'm sure all those conditions are already priced in, but what I'm saying is the wheat chart remains strong. Of course, DBA, which is the blended ag one with corn and soybeans in it, those charts individually look strong. That's being reflected in DBA. DBC, which is the like the combined ETF for commodities. It includes, I think it's 47% oil, 25% ag, and then right on down the list, copper, base metals, etc. That's on the verge of breaking out. I'll put that on the list as well. Oil remains super resilient. 115 is your breakout level that opens up 120 on the chart on WTI, and then you can find the corresponding level on the USO chart. I'll put that in there as well. And then we can't talk about commodities without tossing in natural gas, up 9% yesterday. I'm going to include the nat gas chart on the monthly, and from what I can tell, the door is wide open to hit the 2008, 2011 highs of $13. What is it? Million BTU measure. So we're trading 9 right now. So I think there's significant upside opportunity there in nat gas. It's a volatile thing, though. You got to give that one room. They do not call that the widowmaker for nothing. It can rip your face off in either direction. For instance, yesterday, I think nat gas opened down 3% and finished up 9%. So you got to be on your toes if you want to actively trade that. And if you want to take, either a long or short position, you've got to give yourself some leeway on the stops, or you're going to be thoroughly frustrated because of the inherent volatility of that particular item. So anyways, I will put those on the blog this morning. Just to recap, big disappointment on the snap, pre-warn, and gap down. I'm hopeful that the scheduled buyers in the market of $5-6 billion a day, at the very least, stabilize things, and at the best, overcome this disappointment as a one-off and take this thing higher, fill the overhead gap, and keep on going right into the Memorial Day weekend coming up. So that's the game plan for today. Watch your levels, respect your stops, and contain. If it does go to the downside, by all means contain further damage. And if it stabilizes at a lower level, then we can recalibrate from there if indeed that happens. So If you're new to the channel and you like the analysis, please hit the subscribe button, the alarm bell, the like button, all that stuff. Leave me a comment of something I can work on for you. Be happy to do that for you. Jump over in the show notes. You'll find a link to the blog site where you can drop in your email address. Get all my content morning, noon, or night. Try and keep you abreast of what's going on. That way you won't have to look for anything on social media. You'll get it right in your email box. And by all means, pass the link along to somebody in your trading circle that may benefit from the work. Help me expand the channel. I would really appreciate that. And to all the regulars here, thanks for the support. I hope the analysis have been helping you trade on a daily basis. Markets have not been particularly easy, but hopefully the levels will at least give you a solid starting point on the day, and then you can lean on your skills, your execution skills, to make the best of those levels in these volatile market situations. So hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.